think the biggest challenge to get banks to move beyond the regulatory minimums is really the market demand growing. So we've seen in the UK at the beginning, all of the banks are implementing the minimum that the regulation requires. That's starting to change now that the big demand side players are wanting to partner and do more. And banks are now interested in doing that. So I think the move beyond the regulatory minimums will happen naturally, but market forces drive it. It's customers wanting new services, and it's the big demand side players, whether that's the big tech, big payment platforms, big merchants, looking for more from the banks. And I think that's the thing that drives that change. So an interesting question around what does this mean for the Brazil fintech ecosystem versus international fintech players? And I think there's interesting opportunity here. So in markets that have moved earlier with open banking, there are many fintechs that have developed interesting businesses, nice use cases, and I think there's an opportunity for fintechs in each market to look at what's happening around the world and take those ideas, do them faster, do them better, and bring that innovation to a market. But also I see some of the third parties in other markets are building their platforms with a view to exporting that capability and internationalizing. And I think there's some great opportunities here, because particularly if standards are used, it becomes easier to take the same proposition across different markets. But there are definitely local differences that are important to consider. So, for example, in markets like the UK, there's lots of transaction activity within a bank account, but a market like Mexico, where it's very heavily cash dependent, then maybe you see far fewer transactions within the bank account, and that account information is less useful for credit decisioning, as an example. So I think all of those players need to understand both the market conditions and the really interesting global use cases to create a great fintech proposition. Okay, so open banking is starting to have an interesting impact on the lending market. Access to account information is really helping lenders make better decisions. So accessing all of their customers' transaction history, maybe seeing how they pay their rent regularly and their cash flow position, is allowing lenders to make better lending decisions, understand risk better, but also target customers who previously were financially excluded because they didn't have the right credit bureau history, as an example. Now, I think in the UK and Europe, the interest rates are already incredibly low. So I expect it will have an impact on bringing more people into the lending market and people getting better loan offers that are appropriate to them. I'm not sure it will have a huge impact on interest rates because they're already so low. But in other markets where interest rates are high, that could be a very different story, and it could create more competition. It's an interesting question, and yeah, maybe. I think where customers are using these services, though, is typically because they want to see everything in one place and manage their money more easily. It isn't because they want to move all of their accounts into one bank. So yeah, if a provider helps a customer manage their money more effectively, maybe they can do more with that customer. But I don't think there's a natural conclusion that just because you're helping the customer see everything in one place, they'll want to take out every product with you as a bank. So I think those who provide great services will develop deeper relationships with their customers, but I don't think it's necessarily a tool to steal customers and try and own all of the relationship. I think that will typically fail. It's more about meeting your customers' needs. I would say no. The reason I say that, so what we're typically seeing in markets like the UK and Europe are fintechs emerging to help customers with a particular use case or a particular challenge, whether that's loan onboarding, managing their money, getting their information into an accounting platform. And this is usually about making the process more efficient rather than adding another layer and another cost in. So I haven't seen the emergence of fintechs and new players in the value chain creating more cost. Actually, what I'm seeing is that value chain can become simplified in areas like payments. So today, in the card payment model, you have a complicated value chain with card schemes, with interchange and scheme fees and acquirers and gateway providers and all of these things. In a world of open APIs, the payment company can connect directly to the bank and actually simplify that value chain. So I think it will work the other way, and services might actually get cheaper and more efficient. And we're seeing a number of new players helping make better lending decisions by accessing that bank information, which in theory is a threat to the traditional credit bureau model. But at the same time, we're seeing the credit bureaus in UK and Europe really take advantage of open banking and are investing heavily in building their own capabilities. One element of open banking is connecting to banks and getting that information or the ability to initiate payments. But the real value then comes from the players who know how to use that information in the best way. And arguably, credit bureaus are really good at understanding that data, enriching that data, building predictive models around that data. So I would say for credit bureaus, on one hand, yeah, there's a risk that new players can access this account information and help other players make better lending decisions. But it's a great opportunity for credit bureaus too, because they can get access to a new source of data and apply all of the skills they have to normalize it, to enrich it, to build predictive models off the back of it. So I think it's both an opportunity and a risk. So in the UK and Europe, we're also seeing a lot of business and corporate use cases around open banking. So it's not just consumer propositions. In fact, one of the biggest use cases is accounting platforms accessing the business bank accounts to get the data into the accounting platforms. We're also seeing quite a few use cases specifically focused at small and medium-sized businesses, whether that's platforms using open banking to help make better lending decisions or to help try and unlock cash flow for SMEs by getting payments in earlier and providing invoicing capabilities. So we're seeing a lot of use cases in the SME market. Yet to see big volumes in the corporate side. I think that will come. But often the big corporate platforms, the ERP platforms and the treasury platforms have direct integrations with banks. I think they will all be replaced by open banking APIs, but it might take a little longer for that to happen. I would say one bank that springs to mind for me is Starling Bank. So they're one of the digital challenger banks, and they've done a great job of building an API first bank. So they've delivered open banking well, and they've delivered APIs that meet the requirements of the regulation. But more importantly, they've built their whole banking platform as an API first model. So for example, they also provide APIs that help other businesses access the faster payments network in the UK. So they're really becoming a banking as a platform provider. And I think they will do very well out of that because they've built a great technology stack and an API first business model. But there are many other banks that are now starting to deliver great APIs in line with the standards, and doing that quickly and simply then allows them to do more for their customers. So other SME banks such as Tide are doing a great job. So there are a few that are doing this well and really embracing the API first approach.